Welcome back and welcome to Homes Today. This is a presentation of Realtor Advisor Miss Audrey Forshey of Remax Realty. Spring, summer, autumn or winter matters none. Just who is a good candidate to be a real estate investor? The moderator here on this set is CPA Adil Baloch of Accurate Records and Tax Service. Let's hear the conversation.
Good morning, viewers. Welcome to another episode of Homes Today. I'm your host, Adil Baloch. I'm a certified public accountant and a certified tax resolution specialist with the name of my practice as Accurate Records and Tax Services in Montgomery County, Maryland. As usual, with me here is Audrey June Forshey of Remax Realty Services. My knowledge base has increased exponentially over the past few sessions that I had with Audrey on different topics surrounding the real estate industry and the business of the real estate itself. Today, Audrey is going to be sharing with us her expert knowledge on real estate investments. Who is a good candidate to be a real estate investor? Audrey, thank you very much for coming back.
Thanks for having me back.
Appreciate you taking the time, coming out here and sharing your knowledge and expertise with our viewers. Let's get started. Let's talk about who would be a perfect or who would be a good candidate to be a real estate investor.
So I think it's somebody that has a little bit of real estate knowledge. They own their own home. They also have some extra savings in the bank. We want to make sure that they're not going to use all their savings to work with an investment property. So they need to have a little bit of a cushion because there is a fair amount of risk involved with owning real estate investment properties. So once they feel that they're comfortable with the money and the extra payment and the extra ownership of the house, they may look at it and say, you know, what are the tax benefits? What are my investment benefits? And maybe it's a good fit for them.
Very good. So let's say somebody meets that prerequisite based on your definition of what you just said. Somebody who has extra savings, that they are not using all of their money, tapping into their rainy day funds and so on and so forth. Let's say they've qualified based on that prerequisite. They have the money now. What would be, if there are, what would be the different ways or different venues that they could potentially take in investing in the real estate?
So there's a traditional real estate investor, which may be a person that would buy, let's say, a condo or a townhouse or a house, and they'll purchase that property and keep it as a rental property and rent it for years to come. And as it gets paid off and it appreciates over time, hopefully over time, then that is a traditional real estate investor. They'll probably have to talk and consult with their tax consultant to make sure, you know, what the proper ways for them to, you know, maximize their investment and all that sort of stuff. Then there is the property flippers, you know, the people that purchase the properties, the foreclosures, and they gut the house and then they put it back on the market and they flip it for a profit. You know, TV has really made this quite the industry. People see it on TV and think I can do it, and there's quite a few people out there, and they do it, and a lot of them do it well. Those people usually have cash, or they may go to a lender and they use what they call hard money. So hard money means that they're not a lender that follows Fannie Mae and Freddie Mae guidelines. So that could be a person that gets a group of people and they pool their money together and then they loan it out. And typically they'll loan it out at a higher interest rate than what you could get at the bank, right?
Yes, sure.
So I think the people that do the flipping, I think they have to be very careful though, because the expenses can catch up with them very, very quickly. You have to make sure that the margins are there, that the market to sell it again, and you don't have a lot of carrying costs. You've got to make sure it's in a good location, and you got to make sure that it's going to sell, because I've seen a lot of people or a lot of properties that are flips and they've sat on the market for a long time.
For a long time.
Yeah.
So basically, it is like any other business.
Yes.
You have to do your due diligence before
Very
you get
much
into
so.
it, and you have to find out what's involved, what it's going to cost, and how long it'll take for you to recoup everything, and how quickly you can get out of it, and so on and so forth.
Yes.
Good point. Very good point. Outside of the tax benefits and everything else, which obviously, you can ask those questions from the people who are in that business. What would be your recommendations? Let's say a person who qualifies.
Yes.
Based on the very first point that you made, that you have enough in savings, so you don't tap into everything. They're qualified based on that. Then they probably have access to some capital through borrowing, and they are pretty much ready. They have made up their mind that they're actually going to get into some kind of real estate investment. What should be their first step at that point once they have made their decision and they're ready to go?
Sure. So just like a regular buyer, we're going to have them talk to the lender.
Got it.
First things first. They're probably going to be in a loan program that is for investors, and typically you're going to have to put probably about 25% down on the loan. And the rates used to be higher, but they're only about 0.25% higher than the going rate for an owner-occupied property, maybe 1/4 to maybe 0.5%. So it's not too much more than the going owner-occupant
Sure.
rates. And so you're going to go and you're going to talk to them, and then you're going to need to scope out the property. And again, you're going to have to make sure that the margins are there, that you're not paying too much for the property. And I find too that people that are true investors, they don't get emotionally attached to the property. You know, like when you're going to buy the house you live in, you love it. Most investors, they look at it, it's a business transaction, they like it or they don't like it, the numbers make sense or they don't make sense, and then that's it.
Sure. So they buy it as a product and they sell it as a product,
Very
as
much
opposed to
so.
buying it as a house and then selling it as a product. Very good. Excellent. Good point. Very good point. Aside from, again, going back to the actual monetary side of it, aside from potentially taking some tax benefits and making decisions on whether to depreciate, to what extent, because depreciation obviously gets added back to the basis when you are getting ready to sell. So for your capital gains, you don't take the benefit of depreciation at that point, because you got the benefit as you went. Now you have to add it back, and so on and so forth. Leaving those technical issues out, what could potentially be done in case of an investment property? What could potentially be done so that the benefits always outweigh the cost that has been incurred over the years? You talked about the staging and so on and so forth for personal properties, but this is a rental property. Is everything applicable here as well, or would there be a different approach when it comes to investment properties?
Well, I believe that when you're thinking about selling the property, you definitely want to do the updates and that sort of thing. I personally have some rental property, and I really, really try hard to keep them updated and keep them fresh, because I would rather do that now than try to do everything all at one time. I think that makes better sense. And for me, some of those things are tax deductible, and those improvements and stuff like that. So it is a benefit for me to keep it up, usually on a yearly basis is what I try to do.
Sure. And then by doing that, of course, you're adding to the basis so that you can potentially reduce your gain as well when you hopefully sell it for a gain, for a profit.
Yes.
So yes, absolutely. That's a very good point. Now we talked about. You mentioned two different kinds, right? You said
Two different kinds of investors.
Investments, right? So so far we've just talked about one,
Right.
Right, and then the in detail, anyways. So this is a long-term investor,
Right.
buying the house, keeping it as a rental property as long as they want to, or as long as it makes business sense to keep it that way.
Right.
What about the other side? There's people looking to flip, to what extent? And I mean, let's just talk about some sort of generic advice for them, maybe, or generic knowledge. Let's say somebody is looking to get into that business and they know nothing about this business. What would be their starting point, maybe?
To find the money to purchase the properties would be the first thing. Probably. So if they do have the money, then looking for the properties, you're probably going to be looking at foreclosed properties, short sales potentially, and then you're going to need to have a good contractor that can give you a good estimate on how much the improvements would be and how much money that will cost.
Sure.
Then you need to look at all of the closing costs involved in it. When you purchase, there are closing costs. When you buy the property, and when you sell the property, there are closing costs involved in it. You've got to take all of that into consideration. I see a lot of TV shows and they do the math, but they forget about all of the closing fees that are attached to the sale of the property, and that does get into your profit. The other thing is, you want to know what the market conditions are. You've got to, location and market conditions are very important in terms of these flipped properties. And I do think it's important for the flipped properties to be staged because they're vacant properties.
Sure.
And they usually sell quicker for more money.
For more money. Now, so this being a product, from the time this person buys it until the time this person sells it, this has never been home to this person.
Right.
And let's keep our focus on a flip property for now.
Okay.
So there's no long-term investment or there's no long-term capital gains or anything like that involved. It's just strictly buy it and sell it. Quick in and out is what we call it in our accounting slang, for lack of a better term. You're talking about staging. Would it be of any benefit to someone who's actually flipping properties, and when they stage, they just sell it the way it is, meaning fully decorated and everything? Would that be of any benefit to people?
I mean, some people might ask for that sort of stuff, but most people have their own furniture. I mean, that would be
Sure.
An additional sale. Banks are not going to want to know about, or they're not going to want to be involved in the sale of personal property or any
Sure.
of that sort of stuff
Sure.
like that.
Sure. So let's go back to our long-term investors. Let's say I buy an investment property. I have it ready now, and I'm getting ready to put it up for rental. What would be some of the steps that I should be taking as a landlord?
You are going to want to put the property up for rent. You can do it yourself, or you can hire a real estate agent or a property management company to help you with that. The main thing that you want to do is you're going to want to vet the person that wants to live in your property.
Sure. Very important.
You're going to want to check their credit, make sure they have their job that they say that they have, because in the event they don't pay you the rent and you do have to do some sort of an eviction on the property, you're still going to be having to pay all of the bills yourself while that process may or may not be happening.
Sure.
So just make sure that you have enough of a cushion to cover that in case it happens. But most tenants are very wonderful, and you just want to make sure of their credit worthiness when you're taking an application.
Sure. Are there any legal or business requirements
Yes.
for properties to be rented?
Yes. So in Montgomery County, Maryland, and through Maryland, in different municipalities, you'll need to have a license to rent properties, and DC is also the same. And some of those areas may or may not include an inspection of the property. They may want, more smoke detectors, that they want to make sure that it's safe, especially for fire hazards is what they're usually looking for. But you have to have a license to be in compliance with the lease and the law. So you want to make sure that you check that out.
And certainly seeking the help of a professional. A professional would be able to
Of course.
provide all this information.
Of
Right?
course.
It's just like a turnkey solution.
Of course.
They might even take care of it themselves.
Of course.
Instead of having you go through that process. Any general advice for either one of the categories? People are interested?
I think that it's important that if you have a realtor on your team, whether you are a traditional long-term investor or a flipper, I have to call them, you need to make sure that you have an agent, a professional, run the comps in the area to make sure that you are properly paying the right price for the house and not overpaying for it.
Very good. Excellent. Viewers, once again, like every week, educating, increasing or adding to the knowledge base. Audrey, thank you very much.
Thanks, Adele.
Enjoyed the conversation once again, as every other week. Hopefully your topic next time will be even more interesting. Until then, viewers, we say goodbye and we will see you next time. Thank you very much, Audrey.
Thanks.